Welcome to a new update, and today, as you know, it's Bitcoin update and we have picked a beautiful day. Bitcoin has reached $30,000 for the first time in a long time, as we have been accumulating between 15 to 25k. So we're going to discuss that today, but before we continue, make sure to hit the like button, subscribe to this YouTube channel if you do enjoy the content. Also check out our Twitter and Instagram where we're posting content on the market, and our free trade letter, which is provided to you 3 times per week, in which we give you all the latest information you require for the markets. And then also, as you might know, there's a different schedule on YouTube. Today it's Bitcoin day, we always post an update on Tuesday. On Thursday it's macroeconomics day, and this week we will be covering everything surrounding CPI. As you know, it's a very important event. And on Saturday we do an altcoin update, which is about the altcoin portfolio I originally started a while ago, but now we're doing a weekly update on the altcoin update, and if you on the altcoin portfolio and the challenge from 1 to 10k. If you want to know more about the altcoin portfolio, make sure to join our public Discord, which you can find in the description beneath. We are building up a community where you can grow as a trader and investor. And if you want to learn more about the markets, we are currently doing a whitelisting for a crypto course level 1, which we will launch in approximately 6 to 8 weeks from now. If you want to win one of those, you can find it in the link beneath. Now, when we're looking at the markets today, we are of course going to discuss the price action of Bitcoin. Bitcoin is up above 30k. It's actually consolidating around 30k, but we have been seeing 30.5. And in last week's update, we have been describing the case that we most likely are going to continue rallying upwards. And in this case, and in this update, we will be covering that even more. Also, when we discuss the markets, we also need to congratulate Michael Saylor, as he is finally back in the green numbers. He's back into profit land after he has been buying another 1,000 Bitcoin in the past week. Also, I've been briefly touching upon altcoins, and I've been stating that altcoins are most likely going to continue moving. But what do altcoins need to continue moving? They need confidence in the market, and the confidence is back in the markets as Bitcoin is currently fighting 30k and started to break upwards. So the more that Bitcoin starts to make the trend, the more likely we will be seeing altcoins following along. So if you want to know more about altcoins, you have to check out the other update, as in this update we will be discussing Bitcoin. And as you know, first we will be diving into the latest news events. The first important event of this week is of course CPI. We've got a few big events taking place this week. First of all, we've got CPI, we've got FOMC minutes coming in, and then on Thursday we've got PPI, which is the same as CPI, but then from a producer's perspective. And we've got retail sales, which is all spread out over this week. Last week we have had an entire week of unemployment, in which unemployment rates were dropping, while all the other factors regarding unemployment were worse than expected. So the unemployment rate is most likely going to rally. And we know that when an unemployment rate is going to rally, it will be inducing a case where we are going to see the Fed shifting its entire policy. And when we talk about shifting the entire policy, we are also going to look at CPI. And CPI is the consumer price index, and it measures the inflation that we have on a year-to-year basis, but also on a month-to-month basis. And it's often the most important event to look at when it comes to macroeconomic data. Especially in the crypto markets, you will often see a lot of volatility around the event, and it could be a market breaker. So if the CPI comes in at a certain number, it usually ends up by a very volatile move. If you're planning to trade the event, make sure to don't have very tight stops. It often takes out all the stops on both sides, and also don't get tricked in the first move. Usually you will see a fake out first before the actual move starts to take place. Often what I'm doing when it comes to CPI events, I just take it from a higher time frame. I'm not too good at trading events, and I think they are most likely noise, because the bigger trend is most important in trading. I'll just let it pass and take the higher time frame approach and just reflect on what the data is telling me, and then reconsider my strategy. When we look at the CPI number, you can see it next to me, which is the projections for tomorrow. First of all, last month's data was that CPI had 6.0%. It was a drop already, but a slight drop, which means that most likely CPI, it needs to drop quite fast during the current month's data. We could be seeing that. If we reflect on Europe, we can also see that the CPI data in Europe has been falling substantially over the past month. So, for instance, in the Netherlands, it dropped from 8% to 4%. So there is a potential case. Now, the expectations are that we drop from 6% to 5.2%. That is the regular CPI. Then we also have the core CPI, which is projected to come in at 5.6%, which is higher than 5.5%. You might wonder, why could core come in higher than expected? I'll just explain to you that core is different than the regular CPI. So core CPI is a number that is used for determining the inflation or the price index, but it is without energy and food. So the regular one is the one including energy and food, and what has been the most volatile in the past 2 years? It has been commodities. So that's why you see CPI running up substantially, core CPI being relatively weak, and now we have a shift where core CPI starts to become higher than regular CPI, as there is a case of deflation on energy and food at some point, or commodities at some point. For instance, gas has been falling quite heavily, so the prices right now are lower than a price a year ago. So that's why CPI and core CPI can differ a little bit. Also, core CPI is higher at this point, as we know that China is opening up relatively due to COVID-19. They have been slowly opening up. If we recall from last year, when we started to open up, we had a supply shock which induced that commodities and other products have been rallying in prices. The same can be said about China at this point. China and the US work a lot together. That's why probably core comes in higher. What is the expectation for me at this point? I think it's a tricky event, but I'll just go through all the options that I have. First of all, CPI coming in at 5.2 or lower. I think the music starts to continue playing again. Right now the trend is up. We're going to see that in the charts in a little bit as well. If CPI comes in at 5.2 or lower, the arguments for the Fed to stop shifting or to shift the entire policy is going to increase. So most likely we will have 1 or 2 more 25 pips and then they are done. That's what we want to see. So in order to have continuation on Bitcoin and the markets, you clearly want to see 5.2 or lower for CPI, which is the most tremendous case at this point, and that would be great for the markets as a whole. So if CPI comes in lower than expected, I expect the Fed to shift their policy, or at least pause their policy relatively soon, as unemployment is most likely going to rally as well in the coming months. And then we can see a continuation of the momentum as we have right now. If CPI comes in higher, which is at 5.3 or 5.4, it can still be bullish for the markets, but most likely you will get a wick on the day itself, resulting into a ton of volatility and to stops being taken out. But if it is 5.3 or 5.4, we need to see what the other data is going to tell. If, for instance, 5.3 or 5.4 comes in and core CPI comes in higher as well, it would mean that the core CPI starts to rally again. That will be inducing a case where the inflation starts to become sticky, and that could induce the Fed to continue hiking even more, which they have been hawkish on a little bit in the previous events. So if it is 5.3, 5.4 and core comes in higher too, that's not good. If 5.3, 5.4 comes in and core comes in at 5.6 or lower, we could also look at the month-to-month data. So if the month-to-month data reflects a lower increase in CPI numbers, for instance 0.1 or so, that is going to induce continuation of the markets as well. So 5.3 or 5.4 isn't bad yet. It becomes bad when the other data is bad as well. So that's what you need to look at, because if it comes in at 5.3 or 5.4, we still have a drop of 0.6 to 0.7%. So that's the good case. Lots of outcomes, hence why I stated that we could be looking at a case where you need to take it slow and to be patient with these events. On Thursday, I'll be discovering this topic even more. Now we move on to the next topic, which is Russia. When we talk about important things to focus on, we can definitely conclude that everything happening between Russia and China is something we need to take into account. And therefore, this news item from a few days ago, it states that Russia becomes world's second largest crypto miner. It's an important one, as we also know that Russia has been opening up payments in Bitcoin, and recently they have been agreeing, including BRICS, which is Brazil, Russia, India, China, and South Africa, to potentially create their own currency and also to do settlements in the Chinese currency. So there are many things happening at this point when it comes to the macroeconomic playing field. And then this is also taking place right now, which means that Russia has become the world's second largest cryptocurrency mining country this year. It has been shifting from the United States or from China towards Russia. So the United States is still by far the largest crypto miner, but Russia is currently generating capacity which has reached 1 gigawatt in January and March of 2023, which has been taking over the spot from Kazakhstan. Borat is not anymore into crypto mining, as Kazakhstan has induced restrictions on crypto mining activities in 2022. It's important to realize that China has been banning crypto mining, but that Russia is mining as much as it can right now, as it takes over spot 2. I think that the fact that those countries are getting more into gold, they are into commodities. It's great to see that these countries are also getting more into Bitcoin mining, which would push the markets up at some point in terms of adoption as well. And when we talk about important things to recall, we know that China and Hong Kong is opening up somewhere this year in Hong Kong with the legislation and regulation on crypto, which means that there is a big influx coming from these countries, rather than the fact that we have a lot of, well, let's say negative things happening in the United States, which we call regulation, but also all the attacks against stablecoins from the United States taking place, which therefore I would like you to currently watch a video which was presented to me earlier this day, but you can see it on the Bitcoin Archive Twitter, which is a 1.5 minute video regarding the CBDCs, which is also a very important topic you should focus on.
Really want to get rid of most banks. Now, the big ones are too big to fail. But in the end, the ultimate objective is to essentially wipe all of the banks out so that your bank will be the Federal Reserve. Everything will be centralized. And again, this is not really about the money, although of course it is. This is about power and control, because the government, such as it is, will have access to all of the information related to every single transaction you make. You buy a stick of gum, the government will know. You buy a new car, the government.
The CBDC that the US wants to create, and also in Europe, is a currency that you need to use to buy goods, which will mean that you get limited, your privacy gets limited, but you also are forced to use the money to spend it on goods which you might even don't need, but you are forced to spend it, and the government actually knows where you're spending it, how you're spending it, etc., which we call the social credit system, which is comparable to China. So instead of a lot of freedom and capitalism, etc., it's more called communism. And it's a very big threat to everything that we should be standing for when it comes to life. So it's good that this is taking place on Fox Business, but therefore it's also very important for you to understand what is taking place on the big macroeconomic playing field. Right now the focus is heavily shifted towards what's happening with Ukraine, etc. But we should be focusing on these topics, as those will be taking into account at the moment the next crisis starts to take place. And they need a crisis to actually push these through. Which means that if the policy from the Fed continues to take place, at some point there will be a depression. And a depression or a recession is an argument for the governments to take over control even more. And therefore, CBDCs are most likely coming into play in the next crisis. I'll continue with the video.
Oh, you bought the wrong car. You didn't buy an EV. Now you're going to get penalized. So in the end, Sean, this is really...
It's important. If you don't buy the proper car, you get penalized. That is an option that governments can be doing. So if you don't buy an electric car, I don't drive an electric car, but if you don't buy an electric car, then you might be getting penalized as you're not following the government standards.
a move toward a CCP style social credit system. And they're using this move to a central bank digital currency as the biggest lever to try to get us there.
It's important to note that other cryptocurrencies like Bitcoin is decentralized. This will be centralized within the government. Bitcoin is a technology for freedom. This is a technology for control. I mentioned this before. I brought my prop. I got a $20 bill. I can use
Bitcoin is a technology for freedom, which is self-custody. The government is creating a currency, which they already have, which is the US dollar for control. So they want to have more control.
Use this $20 bill however I choose, for meat, for guns, for even illicit purposes. But when the government controls the dollar, they can control, as we talked about in the report, whether you can buy a firearm, how much gas you can buy, how much electricity you can buy. Can you buy meat, or do you have to buy bug-based meat? They can control everything that you purchase with a digital dollar, and whether you can purchase.
It's important for you to watch, and I think you must be watching this, and that's why it's super, super important to do and to keep self-custody and control. You need to take control. That's why you need to invest into Bitcoin. That's why you need to take money out of the banks, put it into self-custody, but it goes about everything in life. So I wanted to watch this video alongside you. I will be covering more about CBDCs in the future as well. Now it's time to switch towards charts as the markets are heating up. So let's get towards the charts. When it comes to charts, you have to look at on-chain analysis, and you have to look at charts itself for price action, as price action is often the most important indicator, right? First thing I would like to bring up is the halving price performance. On the chart, you can see different halving cycles. The orange one is the first one, which is a long time ago. The red one is the one since 2015, which we had a prolonged bear market, as you might recall. The blue one is the case of the previous bear market, which is 2018, 2019. The green one is the current bear market, which you could discuss whether we are still in a bear market, because the actual bear market ends with the cycle low. In this case, the bear market ended in the second cycle 2015 here already, and then a year of sideways movements took place. But what I want to show is that there's a cycle taking place all the time. The only thing that changes is the length of the cycle. So the cycles might become longer at some point. I'll discuss the topic later as well. But what we see here is that during this period, we often get an upwards trend going. So with the previous cycles, we had a rally taking place. The blue one was the 2019 rally from 3K to 14K. No real momentum on social media on crypto, but we had this rally, and then we had a crash taking place later on with COVID-19. People are referring to this entire cycle and take notes about the fact that we will obviously get a retest taking place on the markets. We don't need to, but what I wanted to show is the fact that we can continue rallying until there is a peak high, and these rallies are often higher than what most people are expecting. 2015, 2016, we had a breakout as well and never really had any retest, but we had prolonged sideways periods taking place, which is a very likely case to take place now as well. So we are on schedule, which means that most likely we will continue taking the rally into this Q2, and we continue to rally until macroeconomic events are going to take place. Another important one is the fact that we just mentioned that self-custody is important, and also the underlying importance of Bitcoin with the overall macroeconomic events and banks falling apart. What you want to see is that addresses are growing. In the US, the fear around those banks, the people that have money on the banks, you could see that on Google searches. But what we can also see is that the addresses are growing substantially heavily. In the past 2 months, approximately 1.5 million accounts have been created when it comes to Bitcoin. And you know that fundamental growth and technology go into a parabolic move, in an exponential move. So what you want to see is that those addresses are going to keep building up, which means that if these are going to accelerate at some point, price usually follows. So at this point, we have 1.5 million new accounts into the past 2 months, which is although the price have been into a bear market, which is a bullish statement for continuation, as I mentioned before as well. Then the final one I want to show is, I stated on Twitter that we most likely are going to break out with the markets. However, people were stating fear and greed index is on 62, which would most likely mean that we're going to correct, or there is an argument that fear and greed is at 62, so there's not much bearishness at this point. There's also not much momentum at this point. It is very comparable to the 2019 rally. Usually retail gets interested when it's very much too late, so at the end part of the cycle where hype is getting through the roof, or when there's a certain desire or need that they have to use something else than their own currency. And then I'm referring to countries like Zimbabwe or Argentina or Turkey, where the adoption of crypto has accelerated quite substantially. Now, when we're looking at the cycle, we can see that we are currently into greed, is what the fear and greed index classifies this. It's at number 62. Number 62 isn't really reflecting anything, and some people are basing their theory on one indicator, which is this one. If we go back in time, we can also conclude that being at 62 can continue the movements. So here in 2019, we already had those numbers too. We reached 63.61 while Bitcoin was still moving at 4K. Then during the entire run, we started to see numbers that were still between 40 to 70 and induce further bullishness. So if a fear and greed index shows 62, it is a healthy number. And it's very healthy because it can continue the momentum. If it would have shown 85 at this point, you can start concluding that we most likely get towards the end of the markets at this point, unless you are in a very heavy bull cycle, but that's not the case. Then if we reach numbers like 80 to 85, we are getting into the end stage, and you should know that if we are getting into the end stage, your window of trading is going to be shorter and shorter and shorter. So the worse the fear and greed index, the better the entry, and the longer you can sustain in your position, which you can see here as well. We reached 15K, the fear and greed index was on a very low number. It is often the case where you can start building your position for a longer window. Now we are already in the run, and we can continue this momentum until we reach a level where the bullishness gets towards extreme greed. And when we look at levels of retest and extreme greed, we have to look at the markets and the perspectives there. I've tweeted this yesterday or the day before yesterday. Obvious retests most often don't take place. The majority wants to have something as an optimal bet to take, but often this optimal bet doesn't come at that point because the majority follows it or looks at it, and then the majority is usually not right. The retest often comes when the least amount of people expect it to happen. So in 2019 we had the exact same. We had a rally which was taking place in just 6 to 7 months. The first build-up took place in January, February, March, and then we started to rally in April until June of 2019, July 2019, which could mean that during this period of Q2 2023, we could be having continuation taking place here too, and then the second half is going to be a correction taking place. Most likely as well, given that the policy of the Fed will induce a case where we're going to have the impact of that taking place in the second half of this year. Hence why we can have a recession then and corrections on the market. So that's why the window right now is important to make the money on. So we had this retest at 4K. We had a retest at 7K. It didn't really give it until we got the retest taking place 5 months later. And then we had this fake out rally resulting into a massive crash. And then in 2020, we got the retest at 4.2K. In 2015, we didn't even get this retest. We only got this retest based on the fact that we had an outlier with COVID-19 resulting into BitMEX engine failing. Now, when we look at the current market cycle, and I'm clicking the wrong chart 3 times in a row, we can argument the exact same. We have been moving into a period of between 15 to 25K for approximately a year, which results into people not buying in because the fear was so high. Now people want to buy in and it's a little bit too late. downwards trend and the obvious retests are also not taking place. We didn't get a retest at 37k. We didn't get a retest at 28k. Now we start to run up. We don't get a retest at 17.5. We could at some point, but we should be having a very big macroeconomic event taking place. 25k, the most obviously watched chart at this point. We could be getting a retest there, but most likely we continue the rally and then we get to 25k at a later point in time when the majority is not expecting it. So the most optimal and obvious retests are usually not taking place. Of course, in this update we are looking at the DXY and we are looking at the other charts. Firstly, we're looking at the DXY, which is an important one to watch over the current week. As I mentioned, I was looking at 106 as a bearish retest. We did have the bearish retest. The trend remains to be down, and I assume that we continue to fall down at least for the coming period. We also can recall from 2008 that during the actual crisis, the DXY started to correct quite heavily and has been volatile. So I think that taking these lows is optimally what we're looking at, but the trend is down. As long as the trend is down at this point, we can continue having momentum on, risk on. Something you need to watch as well during this week is the 2-year yields. The 2-year yields are currently bouncing, still trending down. I wouldn't be surprised if we get somewhere here and then we correct and continue to fall again. But overall, the 2-year yields are looking like we're continuing the downwards momentum, as we also have a massive bearish divergence taking place here. So most likely this trend, like we see here in 2018, is going to take place on the yields as well. Tomorrow you need to watch this one because the 2-year yields shows what the markets are pricing in governments for. So if CPI comes in way higher than expected, you probably see the 2-year yields rally up because markets are expecting the Fed to continue the policy. If the yields are going to fall, it is an argument for risk on, especially tech companies, etc., high debt companies, because they can borrow money for a lower rate, and we probably are not going to continue the Fed policy. So these two charts are important to watch. The other one which is important to watch is the Nasdaq. We are still trending up. Last week I stated that as long as we trend upwards, we most likely continue, as long as we have this fake QM that we are not pivoting, the trend needs to continue going upwards. So right now we are still trending up, which is great. If you're looking at the lower time frames for Bitcoin, we can clearly conclude that we are having a breakout of this entire trend line or this range. We have been moving sideways and we have been breaking up, which means there was no bearish divergence. There is still no bearish divergence, but we should be taking account into a few important levels before we can say, hey, we are going to reverse. First of all, the previous breakout level was 28.6. You don't want Bitcoin to drop beneath 28.6 in a very fast manner. So as long as we stay above 28.6, it is fine and we continue the movements. Then second, you don't really want to see Bitcoin drop beneath 27.8 as that's the last low. So when we're looking at the daily time frame, I think that a very shallow correction taking place, but sustaining above approximately 29k is what you want to see. Now, when you are argumenting about position sizing or position taking, I think you're not eager to look for longs at this point for Bitcoin. I think you might be looking a little bit more towards altcoins or towards Ether, for instance, or Litecoin. And you just want to have those clear retests taking place with Bitcoin, which do take place. But if you want to buy Bitcoin here, your stop is going to be really wide. So that means that there's no real argument to long at this point, and there's also no argument to short on the higher time frames. Unless we get daily bearish divergence, unless we break beneath 28.6, for instance. Now, we are moving around the target, as I mentioned before. Right now, I think shallow correction would be great. Even if CPI comes in, a shallow correction would be good enough. We have been holding crucial level 27.6. I think the levels are quite clearly the same. And I think that we continue the movements approximately towards 40 to 50k. I think 46 is going to be the high. And then we're going to have a reversal in the second part of the year. So it's quite simple at this point. I hope that the charts and all the information has been enough for you. Let's get towards the end of this video. In today's update, we have been going through all the important events when it comes to Bitcoin. First of all, we have discussed the breakout of Bitcoin to 30K. We have been covering my view on CPI, which we will be discussing in the update on Thursday again. We have been going into Russia, we have been going into CBDCs for a slight manner, and we have been diving into charts of why the Fear and Greed Index isn't the best ingredient to look at if you are trading crypto and you solely focus on one. We have been looking at important levels to watch for Bitcoin and also why we don't get the obvious retests in the markets when something starts to trend. And I've been looking at the markets in important levels, as I mentioned, on higher timeframes and lower timeframes, and my prediction for the coming period. If you want to stay tuned, make sure to hit the like button, subscribe to this YouTube channel. I'll be back on Thursday to cover everything surrounding CPI. If you want to know more about CPI, make sure to follow me on Twitter or Instagram. Have a wonderful day. I'll see you again soon. Ciao.